Okay, so the crypto market seems like total chaos, right? But what if you could actually decode it?
We all see the price flashing on the screen, but that's just the tip of the iceberg. For most of us, the journey starts right here, a dizzying sea of numbers on CoinMarketCap.
Or maybe on CoinGecko, it just looks like a massive, volatile market that seems totally random.
And we're talking about a lot of coins. Over 18,000 of them are being tracked right now.
And get this, the total market value is over $2 trillion. That's a massive economic force.
So what's really driving these prices? How do analysts see past all of that noise?
They use something called on-chain data. Think of it like an X-ray of the blockchain itself.
Platforms like Glassnode are pioneering this, offering a peek behind the curtain of the price charts.
And CryptoQuant does something similar, giving you actual insights for data-driven decisions.
So what can you see? Well, you can track capital flows and get a real feel for market sentiment.
And this data also lets us follow the giants of the market, what we call the whales.
Services like Whale Alert are basically a sonar system, tracking massive real-time transactions.
We're talking single transactions worth hundreds of millions. Now that is market-moving info.
And it's not just mystery whales. Public companies now hold Bitcoin on their balance sheets. But here's the thing, crypto doesn't exist in a bubble. It's tied to the whole global economy.
Yeah, big players like JP Morgan are now analyzing crypto right alongside traditional assets.
This gives analysts two views, crypto-specific metrics and big-picture stuff like inflation and interest rates.
So you see Bitcoin being treated less like new tech and more like a traditional asset, kind of like gold.
So to really get it, you start at the price, then go on chain, and finally, zoom way out.
Which leaves us with a big question. Does all this data make things clearer or just more complex?